Hello, dear students. Let us understand about security analysis and portfolio management subject in this session. So, we often say this as SAPM, where it comes under finance electives. So, before getting into what is the security, analyzing that, and portfolio management, fine. But basically, we need to know what is this investment. Okay. So, investment is nothing but the employment of funds, where we are just employing our own funds on some assets. Okay, and that assets, it may be properties, or it may be gold, okay, or it may be land, building, whatever, where we are just employing our assets or our funds to that particular assets. Okay, so that is what the investment. And why we are investing that? Obviously just to earn the income. Okay, or we can say this as capital appreciation, or just increasing your capital. For that aim, for that motive, basically everyone, they do investments. Okay, so this investment, it has two major attributes. One is risk, another one is return. Yes, definitely these are the two major things. When we are investing, we are in a position to face. Okay, so risk and uncertainty. Yes, definitely. So risk is uncertainty. We do not know when we need to face the risk. Similarly, see the next point, risk and returns are two sides of investment coins. We have to face risk. Obviously, we can also able to get some return. Okay, so our next is what? It is the possibility of not realizing return or realizing less return than expected. Sometimes we cannot able to get the return, or sometimes what we expected, that return we cannot able to get, but some reasonable amount of return that we can able to get. So that is what less return. And next, so this is what some things that basically there are two coins, two sides, risk as well as return. When we are into this investment, we need to face these two things. Okay, coming to the next part, that is present consumption is sacrificed to get a return in the future. Yes, now you are sacrificing your funds. Why you are sacrificing? To get some return in the future. For future benefit, now you are doing some sacrificing. Okay, so that is what present consumption. So that is why we say that what is going to happen in the future, so obviously it is uncertain. Okay, so financial investment, that is what financial investment is, the allocation of money to assets that are expected to yield some gain over a period of time. That over a period of time, it may be after 1 year or 2 years or even after 10 years. Okay, so financial investment, again, numerous components like markets, like securities, investment processes, financial theory. We need to understand all these things. So markets, we all know that it is a place where buying and selling happens. Okay, it is like it's a trading. Next is securities, different kinds of securities. So where it all includes, again, two major things like risk, another one is return. Okay, process, like what kind of decision that we are going to pick. Next is what? Financial theory, the factors that determine the rewards from the, see, that rewards is for the major thing. Why we are investing? To get the reward, to get the return. Okay, again, so this investment part is over. Again, we need to understand some different concept like speculation. See, before understanding this security analysis and portfolio management, we need to know what is the speculation. Okay, so speculation is like for a short time period, for a short duration, like you're just taking some risk. And why you're taking that risk? To gain some return for a short term. Okay, so this is what, again, buying and selling activities happening. So based on the price fluctuations, for a short period of time, buying and selling activities may be happen. Okay, so speculation, see here, Monday you are buying a product and Wednesday you are just selling it. Why? Because you are just assuming that, you are just calculating that. So definitely the price is going to increase or fall or down, like so. For by calculating, by assuming all these things, by analyzing all these things, so for a short term gain you are just doing these activities. Okay. Yes, this is what example. So he buys a stock for a period, and after that, after a few days, like immediately he's just selling it. Okay. So the major thing is high risk, high risk. Obviously it leads to some high return, but you have to face that high risk. Okay. So probability of loss is actually there in this speculation. So thank you.